Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 51 of the Forex market review. Today we're going to have a look at the daily FX news, and then we're going to look at two currencies today, being the EURUSD and New Zealand USD. And we're going to look at the USD base because we have the Fed announcement coming up in a few hours, probably about 24 hours and maybe 12 hours. And it's going to make a big decision on which way the USD market goes, and that's the interest rate decision and whether or not the Fed will increase the interest rates as most analysts are predicting. So here we have the daily FX, and what we're going to do is just make sure your current local time is set to its GMT. That way all the announcements appear in the current day and time for where you are in the world. We'll then just go ahead and do a filter change. We currently have the high importance, medium and low, and all of these are relevant, but for this session we'll just be looking at the high importance news. So we'll just go through, click on the filter, unclick medium and low, and then go apply the filter, and then it will bring up all the high importance news which have occurred this week and which will occur this week. As we can see, the pound CPI numbers came out. They came out as expected, with the forecast being 0.1 and the actual being 0.1, along with 1.2 and 1.2. So that was actually good news for the pound. The pound has been quite weak the past couple of weeks, and so we did see a little bit of a rally on those news, being good news for the pound and making the pound move a lot higher. We then have the Eurozone survey data come out. That came out better than expected, and also the USD CPI numbers which came out, and they came out as expected with 0.5 forecast, 0.5 actual, and 2.0% forecast with a 2% actual. Those numbers were as expected and in line with market expectation, and the buyers and sellers out there sort of sold the US a little bit. It didn't come out better than expected, so even though they were as expected, the market's really looking for news better than expected, which really gives oomph that the Fed will increase the interest rates these coming hours. We had the New Zealand dairy auction occur, and the numbers are slightly better than expected, and you would have seen some strength in the New Zealand dollar based on those numbers. But the most important figures we're looking at, so for Australian Eastern States time on Thursday, December the 17th at 6 AM, we're gonna, so in about 24 hours, just under 24 hours, we're gonna see the Fed Chair Yellen. She's going to hold her press conference, and she's also going to announce prior to that her interest rate decision. So the previous month, or the previous session they hold it roughly every 3 months, was 0.25%, and everyone's expecting it to go up from 0.25 to 0.5%. So the important information coming out from the Fed will be exactly what do they increase it to. If they increase it to 0.5%, you're probably going to see some weakness in the US dollar. It also all depends on what the Fed Yellen says in her conference. So we're really got to look at these numbers. If they come out better than expected, so higher than 0.5, then you're going to see the US dollar really rally. And if it comes out less than 0.5, you're going to probably see the US dollar retrace. And that's all because the market has already focused in an increase from 0.25 to 0.5. So if we don't get 0.5, if we get lower numbers than 0.5 or even probably 0.5, we're going to see a bit of a pullback on the US dollar because everyone's already priced that in. So we're fingers crossed if you're fundamentally strong the US dollar. Let's hope we get better numbers than expected. But I believe it's going to be within line or maybe slightly lower. But we'll see how that goes. And other news is for the rest of this week are the New Zealand GDP numbers coming out and the CAD CPI numbers. So the CAD has weakened a bit the last couple of weeks, and that's due to the oil. So they will be hoping for some good numbers there to try to get some strength back in the Canadian dollar. So here we are looking at the Euro USD daily chart. And we're going to always like to start on the daily chart just to draw in our support and resistance lines. So we're going to go ahead and grab the horizontal tool, and we just go ahead and just drop in some lines, and we're just dropping in roughly where support and resistance levels are. And the way we determine that is we just look left to where the current market is. So we're currently here, and we just look left to where it's bounced a few times, and here you can see it's bounced a few times there. That's why that could be a good spot. It could be a good spot around these levels here, because we've seen it bounced off there, and then we've seen it pulled up here and have a bit of a bounce, break through, but it's sort of in that channel. So therefore this level where it currently is now could be an opportunity to sell, and we'll just draw it up a little bit more. So that's why we like to draw these levels in, just so we have a bit of familiarity of where the market has and where it could go. And you don't have to be perfect with these lines. These are just a reference point, but it's always good to look left, because you'll be very surprised how the market comes back to these levels. We then want to go ahead and use our fib retracement tool, and we're then going to go in and draw the fib retracement in. We'll then drop down to a lower time frame. We're going to drop down to the 4-hour chart, and we'll just line those up just a little bit better. And the reason why we like to do the 4-hour chart is because it doesn't really matter, but I just like to line it up properly just to see if we get the actual pullback. So we're looking for the pullback on the daily chart, but you can always look it down on the 4-hour chart. So as you can see, we have the resistance level around where we drew that horizontal line, but we also have a 61.8 Fibonacci retracement level. So if the market gets up to this 61.8, that means if it can poke its head through here, obviously it may struggle, because it's a looking left, it was a resistance area. But if it does, it could meet one of the criteria to sell the market and then put stop losses above these highs. So if we do sell around about these levels here, you could be looking at a 400 pip stop loss, and you want to be going to make about 600 pips. So you've got a good risk to reward. You can risk 1 times to make 1 to 1.5, and that's a good risk to reward. We then want to go down to a lower time frame. We're going to look at some other solutions, and we've got some divergence. So if we go from a higher high, so let's see, just click on this one. So it goes up to there. So as you can see, the market's gone higher in price, but the lower in the awesome oscillator. Some people use this as the awesome oscillator, some people use the MACD. It pretty much gives the same representation, but what we're pretty much looking at is divergence, and that's where we get a higher high in price and a lower AO or MACD, and that's divergence. So we've got a lot of things playing in this area. We have the stochastic in the oversold position. We nearly have a fib retracement pullback of 61.8%, and then we've got a divergence on the 1 hour, and if we drop down to the 15 minutes, we have some divergence as well on the 15 minutes, with the price going higher here and lower here. So the only other thing there is to, besides looking at getting out at these support levels down here, what we can do is just go ahead and draw in a fib expansion tool. Again, we just grab from the recent highs to recent lows and then back up to the recent highs again. We can drop down to the 4-hour chart just to drop it onto those points a little bit more accurately. And what this does, it gives us a point of reference of where we expect it to go. And we did expect it to pull back roughly the 61.8% level. And as you can see, if it does get to that 61.8% level, the first resistance area based on the fib expansion tool is the current lows. And that's why we wanted to get out at those current lows, or at least bring our stops to break even and take some portion of profit off. So it just goes to show that the fib expansion tool, the fib retracement, divergence, and horizontal support and resistance levels all pan out quite well. We'll now jump onto the New Zealand USD and we'll do the same thing. We'll just grab our tool, horizontal line, and we'll just drop some points in. As you can see, we're on the New Zealand USD daily chart. You can start, if you're unsure on some time frames, you can start a bit higher, jump to the weekly chart, have a bit of look there. But again, we're just looking left to see where it's bounced a few times and dropping in some horizontal tools, just roughly where the support and resistance areas may be. We're now going to put in our fib retracement tool. So fib retracement, so you go from recent highs to recent lows. That looks pretty good. We don't have to correct it that much. As you can see, it's come back to 61.8% level and a horizontal resistance area, which it's now broken through, but now finding support on. But if you did enter the market at the 61.8, you would have had a stop loss above these highs, maybe 10 pips, 10, 20 pips above these highs. So you probably had about a 200 pip stop loss, and you're going to be looking for about a 300 pip profit. So that's our first point of exit. We'd want to get down somewhere down here, get out of part of our position and bring our stop losses to break even. That way we don't risk any of the further portion. What we can do is jump down to the 1 hour chart just to see if we have any divergence. And we do. We see a higher high in price, and then we see a lower low in the AO. And that gives us divergence. So that's very good news on the 1 hour chart. And then we can look at the 15-minute chart. And again, we still had divergence with a higher high in price and a lower low on the AO. So all of those indicators are good reference points to say that this market could possibly turn around and we could see a move lower. We do have the stochastic in the overbought position where it's come up and it's just too many people have overbought it. It's above near the 80%. It has fallen down, making its way back up. But so that they're the levels you want to look at the same time. But what we need to do now is just remove the fib retracement tool and just drop on the fib expansion tool just to have a bit of an inkling of roughly where we think the market will go. And because the market's moved higher, we have to always make sure that we move the point to the most recent highs, and that being where it's currently been in the last couple of hours. And what we can see is we were looking at getting out below these lows, and that would be a good idea because as you can see, it's just past the 61.8% fib expansion level. So here you could have taken some of your profit. You would have got out for about 200 pips. You would have made about 200 pips. So you could have taken some of your portion there, moved the stop loss to break even, and then if it gets a bit lower, maybe down to here, or those recent lows, you get out for the rest of your portion. And you would have risked at least one to make 1.5, if not a bit more. Thank you for that. That was week 51 of the Forex Market Review. I hope you enjoyed this session. So keep an eye out on the Fed announcement in the next 24 hours. Let's see what Janet Yellen has to say, and we can take it from there. Thank you very much. I wish you all the best to your success. Take care. Bye-bye now.